Okay, friends. So this is the English version management interview of Affle India. A very nice interview, clarity on the sales stake sale, as well as the understanding that their stake increases, and the same details have been given to NSA as well. So let's look into the interview.
Let's get to some more meaningful conversations. We have Affle India's management joining us. The board has approved fundraising of just over 1,000 crores. There will be an extraordinary general meeting, an EGM, on March 24 to get shareholder approval for this fundraising. Anuj Khanna Soham, Chairman and Managing Director, joins us, and CEO at Affle India joins us. Anuj, thank you very much. Why are you raising money? I mean, you've got so much money. Your Q3 numbers were excellent. Profit was up, 50% for the 9 months, that is. Revenues are up 50%. Aren't retained profits enough? I mean, what will you do with the money?
Good morning. Thanks for having me on your show. And, as you know, Affle has a 16 years of history of being a consumer platform global company. 50% of our focus is in India and another 50% is in global emerging markets and international markets. We, in our annual report, had already given a clear vision that Affle 2.0 for this decade, 2020 to 2030, aims to reach over 10 billion connected devices globally, of which I believe around 1 billion would be in India alone. To achieve this kind of a massive growth trajectory and growth plan, we have historically shown that Affle has been super capital efficient. So if I look at the entire history of the company, we would have maybe raised less than $30 million to reach, where we are, which is over 2 billion connected devices. To grow 5x from here, our thesis is very simple, that if we raise another, let's say 30 million times 5, which is 150 million, that should be sufficient capital for us to deliver over 10 billion connected devices reached globally over time.
Right.
So this is really about growth. This is about investing into our vision, and we are super bullish about our capabilities going forward.
Okay.
You're absolutely right that our fundraise is a good to have scenario because our financial fundamentals are really strong. We are a cash flow positive company.
Yeah.
We are consistently growing our profitability. Yeah. And we can therefore use the internally accrued cash flows to deliver a certain level of growth and momentum. But the ambitions are much larger.
Okay.
And when you have that kind of capital with you, you can really make dramatic capabilities as well as investments.
Got that. Anuj, I'm rushing you because, in a few minutes we will be into market opening. So we are trying to get as much from you as possible. If you're such a great growth story, why is your promoter selling? I admit he still has 62% holding. But just the other day, you all sold, you sold 4.57%, from to Nomura. And then more recently, you've sold to William Blair, although it's a small percentage. I mean, if you're doing so well, why would you want to give away your shares?
We're not giving away our shares. You need to understand that my individual ownership in the company, due to the company's structure, is at Affle Holdings in Singapore. And when we have taken this money, it is basically to give returns to the shareholders who invested in the previous 16 years of the company when we were largely a private company, and giving returns to them and buying back those shares means that my ownership, my management team's ownership in Affle Holdings, which is the corporate promoter, has gone up above 75%. And that is a significant up. So if you do the math, yes, we are owning, let's say, 62.6% of Affle India, where it is clearly our subsidiary. We have majority control there. But out of that 62.6%, earlier we were owning just about 55 odd percent, and now we are owning 75% of that. So if you take the effective ownership of the full-time management and the full-time individual promoter of Affle India, our ownership effectively in the list was actually gone up. And there's an information disclosure that's available on NSE for this purpose. The very next day or the same day, in fact, when the William Blair related transaction was reported, we have gone on record to provide this clarity that the individual ownership or the management ownership has actually gone up effectively. It's not come down. So we are long-term believers, and it is a massive growth story, and we are in it for the very long time.
Okay, Anuj, so very quickly, you're saying promoter shareholding has actually gone up. Can you tell us, after this fundraise, as an aggregate percentage of the total share capital of the company, where will the promoter holding be?
That is hard to tell because the fundraise is an amount, and we need to see what the valuations are and when and how much of the fundraise approval that the company exercises as we go along. First of all, we need shareholders' approval. Then there is a whole process, and once that happens, but give or take, I mean, we're still looking at having close to 57% to 58% of the effective ownership in the listco. And at the holding company level, like I mentioned, the management already owns or is clearly on the path for over 75% control and ownership at the holdco, which is essentially, even after this fundraise, our ownership effectively in the listco in Affle India would be higher than what it was at the time of the IPO, even after this fundraise.
You said 50. You said around 57%. You think that it will not fall below 57%, if I got it right.
I would like it to fall below that. As a long-term investor, shareholder, and promoter of the company, I would want Affle Holdings ownership to be a healthy, 57, 58% for the long term.
Okay. Just a final word on this cost per converted user. Can you tell us some trends that you're witnessing in India and abroad?
Absolutely. It is a fantastic and a privileged position that our business is in because we are in a multi-year long consumer adoption trend on digital and technology adoption. And consumers today in India, there are only about 120 million odd consumers who are online shoppers. We expect this to grow to more than 450 million online shoppers in the next few years. And the advertisers are consequently spending a lot of their budgets on digital. So this is a multi-year long-term growth trend that we are seeing across not just in India, but all emerging markets globally. So, we are in an extremely privileged position. ROI-driven, data-driven marketing is here to stay, and consumers are deeply married, putting their money and attention on mobile connected devices. Consequently, we are helping advertisers through our consumer platform across emerging markets like no other company can do today.
Okay. Anuj, pleasure speaking with you. Thank you very much indeed for joining us.